All right, let's get right into it. The world of instant digital loans in India, it's been a bit of a roller coaster, hasn't it? Super convenient one second, but also kind of risky the next. Well, the Reserve Bank of India, the RBI, has stepped in with a whole new rule book, and it's designed to protect you, the borrower. So we're going to break down exactly what's changed and what it means for you.
I'm guessing the answer is yes. You know that feeling, right? You download an app, you apply for a quick loan, and that little voice in your head starts asking questions. Wait, what's the real interest rate here? What are they actually doing with my data? Is it really safe to give them access to my phone? Well, these are the exact concerns these new guidelines are here to fix.
For a while there, let's be honest, the digital lending space really felt like the Wild West. It was just chaotic. It left so many borrowers feeling completely lost in confusing terms, stressed out by surprise fees they never saw coming, and really worried about aggressive tactics or, what was happening with their personal data. It was a situation that seriously needed fixing.
I mean, the rise of these apps was just incredibly fast. They offered something amazing: convenience. You could get money in minutes right from your phone. But this explosion in growth happened in a bit of a regulatory gray area, which, unfortunately, allowed a whole bunch of problems to pop up and affect millions of people.
But now, there's a new sheriff in town. The Reserve Bank of India saw these growing issues and basically said, okay, enough is enough. They've created a really comprehensive set of guidelines. Think of it like a brand new rulebook for every single digital lender out there, designed to bring order, transparency, and most importantly, safety to the entire industry.
So here's the crucial thing to remember. The RBI, the country's central banking institution, is the authority behind all of these changes. These aren't just suggestions or friendly tips. They are mandatory rules that every legitimate lending app has to follow to protect consumers just like you.
Okay, first things first, let's clear up a little bit of jargon so we're all on the same page. When you take out a loan, the money is ultimately coming from what's called a regulated entity, or RE for short. This is the official licensed lender, so a bank or a non-banking financial company. They're the ones actually backing the loan. They're the source of the money.
So then who's running the app that you're actually using on your phone? Well, that's usually the lending service provider, or LSP. They're the tech company, the agent that partners with the bank to find customers and manage the whole loan process. It's really important to understand that these two players are separate, and these new rules are all about how they have to work together.
So how do these new rules actually protect you? Well, the first major area of change is all about your money. The new guidelines put you firmly back in control by making the entire process way more transparent and direct.
And this, right here, is a total game changer. No more third-party pool accounts, no more weird middlemen. It's simple. The loan amount must be sent directly from the bank's account straight into your verified bank account. And when you repay it, it goes directly back to them. This one rule cuts out a massive amount of risk and confusion.
Now listen up, because if you remember just one thing from all of this, make it this: the Key Fact Statement, or KFS. Before you agree to any loan, the lender absolutely must give you this document. It is designed to lay out every single detail of the loan in a simple, easy-to-understand format. So let's take a quick look at what it has. The KFS shows you everything right up front, but you need to pay special attention to that highlighted row, the annual percentage rate, or APR. Now, this isn't just the interest rate. This is the all-inclusive total cost of the loan. We're talking processing fees, other charges, everything, all bundled into a single annual percentage. It's the true cost, which lets you easily compare different loan offers.
And here is the golden rule, the guarantee, straight from the RBI guidelines themselves. What you see on that key fact statement is what you pay. No more hidden fees, no surprise charges, no last-minute costs. If it's not listed in the KFS before you sign on the dotted line, they cannot charge you for it, period.
All right, next up is another really powerful new right that you have. It's called the cooling off period. And it gives you this window of time, usually 3 days, to basically change your mind after you've taken out a loan.
So what does that actually mean? It means you can literally back out of the loan with no penalty. You just repay the principal amount you borrowed and the interest for those few days you had it. Think of it like a no-risk trial period for your loan. It's an amazing safety net.
Okay, so your money is way more protected now. That's huge. But what about all your personal data? Everything on your phone. Well, the second pillar of these new rules is all about building a digital fortress around your privacy.
I mean, just look at this. The change here is absolutely dramatic. It's night and day.
Before these rules, it was totally normal for these apps to just rifle through your phone, your contacts, your photos, your files. Now? Nope. All of that is banned. The only access they can get is one time and only with your explicit permission for essential stuff like KYC verification.
The bottom line is, these new rules put you in the driver's seat. Data collection has to be minimal and absolutely necessary. They need your clear yes for everything they collect, and guess what? You have the right to take that consent back anytime you want. You could even tell them to delete your data. And crucially, all of it has to be stored on servers right here in India.
So after all these major changes, what are the key things you really need to remember? Let's boil it all down to a simple checklist of your new rights as a digital borrower.
Okay, here's your cheat sheet for every time you think about getting a digital loan. 1. Money moves directly between you and the bank. No stops in between. 2. Always review the key fact statement and look for that APR. 3. Your data is your own. Apps can't just go snooping. 4. You've got that cooling off period if you change your mind. And 5. If something goes wrong, every lender has to have a designated grievance officer whose details are easy to find.
And that really is the bottom line, isn't it? This whole world of instant digital loans just got fundamentally safer and more transparent. The power has shifted, and knowing these rules is what gives you that power.
So does all this mean that digital lending is finally 100% safe? Well, these rules are a massive, gigantic leap forward. They create a much safer environment for everyone. But you know, being an informed borrower is still your greatest asset. It's your superpower. So maybe the real question isn't just if it's safe, but how can we all use this new knowledge to make the smartest financial decisions for ourselves?